Circle shares higher after the crypto firm issued its first quarterly report as a public company. Total revenue growing 52% over the prior year. Joining us right now is Jeremy Allaire, co-founder and chairman and CEO of Circle. And it's great to see you. Congratulations. I haven't seen you since the IPO, which I think has been, a wild rocket of a ride for you.
Yeah, it's been an interesting couple months here.
How have you enjoyed? This is the first quarter, so how did you enjoy putting this together? And I'm curious how it's actually even just changed thinking about the company, because before you didn't have to think in quarters.
Well, the interesting thing about Circle is, our main metric is available and its status is visible to the world on public blockchains in real time. USDC in circulation, the amount of transactions happening on our network. And so unlike most companies, we have real-time visibility into, fundamentals for how it performs. So in some ways, we've been accustomed to, people analyzing, looking at that. But obviously, this is much bigger. It takes into account the entirety of the business, the multiple dimensions, et cetera. The other is that, as a highly regulated company, as a company that has been trying to always be at the forefront of trust and transparency, I've had to take a public role, not just with policymakers, but more broadly, so people understand this.
Okay, two questions. You're growing 52%. Is that sustainable? And at the same time, we should note that you did lose money this quarter. Now, I know some of that was this IPO, but what does that look like to you as the year goes on?
Yeah, I'd say a couple things. I think the first is, as you noted, USDC in circulation grew 90% year over year to the end of Q2, and it's been accelerating. So since the end of the quarter to Sunday, August 10th, we've seen it go from 61 billion to 65.2 billion, and I think it's more today. But basically, we've seen this acceleration in transactions, and that acceleration obviously is tremendous. That's 49% year-to-date growth that we've seen in USDC. That's a fundamental driver of our revenue and of our revenue growth. And so when we look out, we don't give guidance on how much USDC is going to grow. It's sort of an economy, and you kind of see that. But if you zoom out and look at what analysts are saying, not just about Circle, but about the amount of stablecoin money that's going to grow, the CAGRs range from 25% to 90%. So an average CAGR is like 60%. We're happy to take the lower end range of that to say, hey, if we could grow 40% a year, that would be great.
That's huge.
Yeah.
Okay, but what do you think is baked into the cake as you look at your own stock?
Well, look, I think the validation that we've seen in Circle and the sentiment around Circle is really about people understanding, I think in some cases for the first time, that the internet is colliding with the financial system. And it's happening. And just like open internet software, networks and utilities change media and communications and retail and education, it's happening to the financial system. And stablecoin money is and blockchains are foundational to that future financial system.
Okay, so weigh in on this big, almost philosophical, practical financial issue, which is that for stablecoins to work properly, they need to be backed by something, typically treasuries. There's a big question mark about who is going to be buying our treasuries in the future, and a view among some that the treasury market is ultimately actually going to be supported for some period of time as a function of the advent of stablecoins, because more people are going to need to buy these treasuries to back the stablecoins, and that should give a boost to the treasury market. Other people say, maybe, but it's really just a recycling of money because the money is going to come out of the banks. And by the way, if they're sitting over with the stable coins, it's actually less efficient from an economic perspective, given that you actually can't effectively then loan against that money in the same way that a bank could.
Well, I think a lot about these issues, obviously. I think first, the base layer of digital cash on the internet needs to be as safe as possible. And I believe that the bipartisan policymaking, I think leadership from the administration has set in federal law that stablecoin money is going to be this very safe, fully reserved form of money. When you have money moving at the speed of the internet everywhere in the world, you need it to be as safe as possible. And short duration treasuries, there are multiple eligible forms of collateral for these, but it is at that short end, right? And cash as a kind of cash-like instrument. Now, I think the view that this crowds out, the ability for lending to happen, I actually think is a mistaken view. I think that when you have super high velocity, very high utility money, people are going to want to borrow that. And I think we're going to see very robust credit markets develop that are operating on blockchain networks. And we'll see actually more efficient credit delivery with more transparency, more supervisability. We actually think we can get to a safer financial system with more effective credit delivery built on this new kind of stablecoin.
That almost puts something like Bitcoin in the permanent class of just a store of value. Because I could argue that you call it safe. Yeah, safe, except for the devaluation, continual devaluation of the dollar as time goes by. You're talking about safe for near-term transactions and absolutely safe. It stays at $1. But the dollar itself in 10 years is worth 70 cents.
Yeah, well, I think there's sort of
there's the two things you're worried about.
The macro view over the kind of fiscal.
But you could never do a stablecoin based on Bitcoin.
That's correct. I mean, essentially, what we see, in fact, as a major growth driver in our business is the internationalization of these digital dollars. And you even hear that from President Trump, Secretary of Treasury. We want to export these digital dollars. We want to put them in the hands of people who want to hold them and transact with them.
Right.
So that global demand is very real. And I think this is a kind of currency competition on the internet versus China versus other markets. And this is a technological weapon to compete. And it turns out also that people don't want to hold a volatile crypto asset in many places. They want to hold $1.
Right.
Because it actually is significantly
next
more
week
stable.
It's still worth $1.
It is actually stable.